Hello fellow investors, my name is Hassan and welcome to my channel. In this channel I like to focus on analyzing companies, and I like to show you a step-by-step process of how I analyze any company. So this is the format of today's presentation. First of all, part 1 I will discuss about a company today as an example, and the part 2 the financials of the company, where I will show you what kind of data and analysis I do usually for any company. And the part 3 contains the future gain or future prediction of this company's market cap and price, and also the comparison between other market peers, similar companies which are well known in the world. So first, the company I chose today as an example is Fila Holdings, and recently it has a very negative sentiment throughout in the market because of pandemic and inflation, and also current economic and war situation in Russia and Ukraine. But on the other hand, the company is actually growing. Recently it shows lots of promise, and lots of their products are quite great, and in Korea they are quite popular. And so we will show in the revenue statement how recently it's growing quite rapidly. But on the other hand, market is negative about this company, and so there is a chance for us like long-term investor to actually um, take it as an opportunity and invest on this company, and in the long run it will do quite well. So why Fila Holdings? As I said, the price is quite attractive now, and it is a chance for us to make a good investment and good gain, long-term gain from this company. So people who don't know about Fila Holdings is a apparel and fashion retailer like Nike and Adidas. They make shoes, sneakers, gowns, jackets, and other products, and also they make golf equipments, which is quite interesting. And here's a brief history of the Fila. It was established in 1911 in Italy, and in 2003 it was acquired by US hedge fund, and in 2007 it became Fila Korea. In 2010 it IPO'd in the Korean stock market, and in 2011 they made a good acquisition of Acushnet Golf Equipment Company of US. So from then on they are in the golf equipment business, and currently about more than 50% of the revenue come from this acquisition. So this is a quite useful acquisition for them. So now for part 2, the financials of this company, I like to take you to Stock Unlock web page, which I use for data, and where I analyze my any stocks. You can find any stocks here and you can analyze it. So far, if you like this video and you like to learn more about the step-by-step process to very simply analyze any company, please subscribe to this channel and hit on that like button, and stick around for till the end to know exactly what I mean by this process of evaluating any company. So here you can see the last 1 year stock price, which is, you can see it down quite a bit from 60,000 Korean won and currently about 32,000 Korean won. And so next I will go to the financials, and here in the income statement you can see the total revenue of the company of the last few years from 2013 to 2021. In 2022 it decreased because of obviously the pandemic, and most of the retail shops were closed. But if you click here, so this is the first step. I look at the company, looking at the revenue and whether it's growing or not. So I like to see a constant growth in this revenue. So from 2017, in fact from 2016, you can see that revenue is constantly growing. In 2020 there was a small dip, but again it catch up in 2021 and passed the pre-pandemic level, so which is a good sign. And that is what I mentioned about the popularity of this brand in Korea, and also their revenue is growing quite rapidly in recent years. Then if you look at the net income, similar story, net income also growing, and it's continuously growing from 2016, and which is a good sign. And next, the most important part for me is looking at the cash flow, whether cash flow is growing constantly or not, and it is positive or not. So if you look at the bottom, free cash flow, again from 2018 you can see there is a rapid growth in the free cash flow. So free cash flow is the cash amount that a company usually have, which they can use to acquire other businesses, or invest on the business, or even pay the dividend, or many other things, whatever they can do. So it is very important for growth and financial status of any company. So it is growing, so that is a good sign. And next, what I do usually, click on that insights button in this web page, which gives me a summary outlook of this company. So this company don't pay too much of a dividend, so I will skip this part. And profitability, you can see all are, even though it's average, but gross margin is almost 50% growing, and if free cash flow also growing at a 12% rate, and free cash flow as a percentage of earnings is almost 200%, which is quite good. And so the growth parameters are all looking quite good. Revenue, as you have seen, increasing at a rapid 20% rate, over 20% rate. EPS also growing at 70% rate. And so this company is growing quite astonishingly, quite a large number. Big book values for free cash flow, all are increasing about 20% rate. ROIC here is also about 20%. And finally, the analyst, they are predicting about 20% EPS growth, 21% EPS growth for the next 5 years, which is quite good. And so here everything looks quite good. And now finally I'll look at this kind of graph where I can see the historical data of price to earnings ratio. So here is the Fila Holdings price to earnings ratio. I can see from the IPO years of 2010 till 2022, but this, because of these sudden spikes, it doesn't actually show this graph quite well. But you can see here the average is about 24 and latest is about 8, and high was at 387. So if I look back from 2018, last few years, you can see that currently almost at 8 PE ratio, which is quite low, and historically is also quite low. And next, if I look at price to free cash flow, which I said is very important parameters, again it's almost quite at the bottom. So average is about 10, but currently it's about 4, which is quite low for any company. Price to free cash flow ratio of 4. Usually market average is about 15 to 20. And later on we will compare these values with other companies like Nike and Skechers and Armour, other companies. So these are the steps I usually look at, and then from these data I can predict the future and growth, what we expect in the next 5 years. So revenue, as you have seen, the analyst is predicting about 20% growth, and already in the last year they have grown at 21%. And so I can easily say that next 5 years it may grow at 10%. We have to assume and we will be as conservative as possible in our assumptions. So as we can see that 2021 they went back to the pre-pandemic level, and 2022, let's be conservative and say they will not grow at all because of the current situation in the world. So they will not grow at all, and from 2023, from next year, it will grow at 10% constant rate. So from there I can see these growths, revenue numbers. And if in 2021 they have had about 10% of net income from this revenue. So if we keep that the same, so I can get the earnings or net income of this company for the next 5 years. And from there, PE ratio I assume as 8, even though it is, I think it's quite low. It is last few years currently it is the lowest PE ratio. So I think 8 is quite conservative. I I assume it will be finally about 12 to 15, somewhere there. But anyway, let's be conservative and use the P ratio of 8, and it gives us a market cap of 4.4 trillion won, or roughly 4.4 billion US dollars. So current market cap is about 1.91 trillion won. So that gives us year to year compounded average growth rate about 17%, which is quite comfortably beat the US market return of average 10%. So it is a market beating stock, and it's currently at a good evaluation. So I will say next compare this FILA evaluation or value of current value with other stocks, like well-known stocks like Nike, Skechers, and Under Armour. So FILA for the last 10 years average growth is about 17%, whereas for last 10 years Nike grew about 7.8%. So FILA very comfortably beating Nike, even though Nike PE ratio is about 34 currently. So it is quite rich, it's overvalued. But on the other hand, FILA is currently at 8.1. So others like Skechers is about 8.5 and Under Armour about 21, even though they are growing at similar speed like FILA. So price to free cash flow even showing that it is at about 10 times lower than Nike, and Under Armour also it is lower than Under Armour. And Skechers is currently not making any profit, so they are not showing any current price to free cash flow ratio. So again, compared to Nike and other companies, that FILA is trading at quite a low cheap price, quite low price, and price to sell is ridiculously low. It is comfortably the lowest I've seen for many companies, and it is about 0.5 price to sales. Nike is about 4.55, others are around 1 to 1.5. So as you can see, these companies currently at a very attractive price, and that doesn't mean that you just go and buy that price, but buy that company or company stock. But certainly this is the steps I usually take to evaluate any companies. And if you like to see more companies and more analysis like that, please subscribe and put that notification button, and also share this video so that my new channel can grow and reach many other people. So thank you for watching so far, and I will see you in the next video. Thank you.